looks like it could be a good time to buy, right?
On the surface, yes. The conditions look, well, pretty favorable for buyers. We've seen that ease in prices, rates are better, and there are definitely more homes listed for sale.
You'd expect a flurry of activity.
Exactly. That's what you'd typically predict with this kind of setup.
But when we look at the actual sales numbers, especially for, say, March 2025, compared to historical trends, well, the activity just isn't there. Sales are kind of sluggish.
Yeah, sluggish is a good word for it.
So that's the core question for this deep dive. What is going on? Why this disconnect between what look like good conditions and what buyers are actually doing? We'll break down the sales volumes, the listing numbers, price trends.
Right, across the board, single-family homes, townhouses, condos.
In both Greater Vancouver, the GVR, and the Fraser Valley, FERABB.
And critically, we need to talk about the elephant in the room, or maybe the shadow hanging over things, the Canada-U.S. trade war. The reports we're looking at mention this specifically.
Absolutely. It seems like that economic uncertainty is playing a really big role here. Okay, so let's jump into those March numbers. For Greater Vancouver GVR, the reports say it was the slowest March for sales since 2019.
Wow, since 2019.
Yeah, down over 13% from March last year. And get this, 37% below the 10-year average for March sales.
37%. That's a massive drop from the average. That's not just a minor fluctuation.
No, it feels significant. It kind of reminds me of early 2023. Remember that?
Yeah.
Flat prices, very slow start.
That level of deviation, 37%, really suggests something bigger is influencing buyers. It points towards, a major external factor.
Which brings us back to the trade situation, potentially.
It seems likely, yes. And if you look over at the Fraser Valley, it's even more stark. Their sales were nearly 50% below the 10-year average.
Half.
Almost half, yeah. It's one of their slowest starts to a spring season in, over 15 years. And they were also down 26% compared to just last March.
So a serious pullback in buyers across both regions.
Definitely.
But it's not like there's nothing to buy, right? Let's talk inventory.
Yeah.
GVR saw a big jump in active listings.
Oh, really big jump. Over 14,500 homes on the market.
Which is, 38% higher than last March? And way above average, too.
Yeah, 45% above the 10-year average for active listings. Plus, they saw a lot of new listings hit the market in March, over 6,400.
Also up significantly from last year and above the average, so plenty of options out there.
Absolutely. And the Fraser Valley, same story, maybe even more pronounced in terms of the increase. They hit a decade high for active listings.
A decade high.
Over 9,200 properties. That's up a whopping 49% from March 2024 and nearly 60% above their 10-year average.
60% above average inventory. Goodness.
And new listings were way up month over month, too, about 22% from February to March. So inventory is definitely not the issue.
Okay, so loads of homes for sale, but fewer people buying. What are prices doing amidst all this? In GVR, the overall benchmark price for March was just under $1.19 million.
Right, the benchmark, that typical home price track.
Exactly, and that's actually down a tiny bit, 0.6% compared to last March, but it did tick up slightly, 0.5% from February this year.
So not collapsing, but not really climbing either, year over year.
Pretty much, if you break it down. Single-family homes around $2.03 million, townhouses just over $1.1 million, condos in the mid-$700,000.
And what about how quickly things are selling? Days on market.
Right. Detached homes are taking about 35 days, condos 28 days, but townhouses only 27 days. And the reports mention they might be nearing a seller's market.
Yeah, that's the interesting outlier, isn't it? Townhouses seem to be bucking the trend a bit in GVR. They're calling it chronic undersupply.
So demand is still strong there, likely because they're, more affordable than detached houses.
Precisely. It shows that even within the slower overall market, specific segments can behave differently based on supply and relative affordability.
And in the Fraser Valley, what are their prices looking like?
Lower overall benchmark, around $974,000. They also saw small month-over-month increases, similar to GVR. Single-family homes are about $1.5 million.
Okay.
Townhouses around $834,000, and condos about $541,000. Their days on market are a little longer for detached and condos, around 31 days. Townhouses are moving a bit quicker there, too, 27 days, same as GVR.
So overall picture, More listings, prices relatively stable or slightly down year over year, but sales volumes way off historical norms. Let's get into why. What are the experts saying is causing this disconnect?
Well, one take looking specifically at GVR was that if you just looked at inventory and interest rates, market conditions are actually the best they've been in years for buyers.
Right, objectively better condition.
But they specifically flagged the economic uncertainty coming from the Canada-US trade war as the major dampening factor. It's casting a shadow, making buyers hesitate.
That makes sense.
Yeah.
That kind of uncertainty. It affects confidence, doesn't it?
Right.
Businesses might hold off on hiring or investment because of tariffs.
Exactly. And that filters down to individuals. People feel less secure about their jobs, their finances. Making a huge purchase like a home feels riskier, even if borrowing costs are a bit lower.
It's a psychological barrier almost.
Very much so. And the expert perspective from the Fraser Valley report basically mirrored that. They pointed directly at the trade war for the slowdown and the general unease.
Unease in real estate and development, too, they mentioned.
Yes, and they highlighted this tension. You have sellers who don't want to drop their prices much, maybe anchored to previous highs.
Understandable.
And then you have buyers who are facing tougher financing hurdles or just plain cautious because of the economy, and they're not willing or able to meet those prices.
So a standoff. Inertia.
That's the word they used, inertia. They believe this stalemate, driven largely by the trade uncertainty, is the main reason sales are so low.
So the trade war isn't just some background noise. It seems to be front and center in explaining the current market mood.
It really does. Both regional boards are pointing to it. It's overshadowing those potentially positive signs like lower rates and more listings.
The reports even floated a question, didn't they? Could this trade friction actually create maybe some niche opportunities for first-time buyers if it softens certain parts of the market?
Yeah, it's an interesting counterintuitive thought. Maybe some pressure comes off prices in specific segments because of the broader slowdown. It's something to watch.
And we also saw that related mention about existential concern in Canada's industrial real estate market because of the tariffs.
Right, which just emphasizes how broad the impact of this trade situation is. It's not just residential housing, it's hitting other sectors, creating wider economic headwinds.
Okay, so let's try and synthesize this. We've got more inventory, somewhat lower borrowing costs, factors that usually signal a buyer's market, or at least more balanced conditions.
Correct. Those are the textbook signals.
But the sales numbers,
Uh-huh.
they scream caution. Major buyer hesitation.
And the consistent explanation offered by the experts in these reports pins that hesitation squarely on the economic uncertainty generated by the Canada-US trade dispute.
It feels like that uncertainty is the dominant force right now, overriding the other factors.
It certainly appears that way. And if these trade tensions continue or, get worse,
Then this buyer caution could persist, right, leading to a longer period of slower activity.
that seems like a reasonable potential outcome, yes.
Uh-huh.
Although we have to remember those pockets of strength, like the GVR townhouse market.
Right, the undersupply situation there.
It shows local supply-demand dynamics still matter a lot. So it's not entirely uniform. There are still segments moving differently. But the overall trend seems driven by that external economic pressure.
It really feels like a wait-and-see moment. Sellers waiting, buyers waiting, everyone watching the economy, watching the trade situation.
Yeah, a period of cautious observation seems like a good description. It's a powerful reminder of how linked our local housing market is to these huge global economic currents.
So wrapping up, we come back to that central puzzle. Good conditions on paper haven't led to the expected spring market surge in Metro Vancouver and the Fraser Valley.
Not at all. Sales remain well below historical levels despite increased inventory and moderated interest rates.
And the key takeaway from digging into these March reports really seems to be the significant, maybe even decisive, impact of the Canada-US trade war and the uncertainty it's creating.
It appears to be the primary factor holding buyers back, overshadowing those otherwise more favorable conditions.
So for you, our listener, as you process all this, maybe think about what signals would make you feel more confident about the market right now? What kind of news on the trade front might actually shift this current inertia?